fairly quick push to 74. And then I think, obviously, that's going to be, to me, where the market has to make a decision. Are we going up and through it to new highs, or do we kiss off the bottom of that and put another leg in down? Because I really feel like you can just barely see my primary trend line there that's way down.
Mm-hmm. I have it on the chart. Everybody else can see it.
Yeah. I think, we've been so overextended since the first of the year. I don't think it's out of the question to have a retracement all the way back down to the primary line before we really start to see legs up again. So I'm kind of looking at 74 as the pivotal turn, whether or not we go up and through that or turn around and put a leg in lower to really test the primary line.
Mm-hmm. So my
1330.
Mm-hmm. I see it, and I have it on the chart, and everybody else can see it. It is going to come in right around 1330. My take on it is only that it's two things. Is I agree with you, it's overextended. We haven't been at the primary in a while, right? The last anchor point in the primary is late November,
right.
And we haven't touched it in a while. Notice that the 20 MA and the 50 MA are also well above the primary, et cetera, et cetera. All this stuff is indicative of the market getting ahead of itself. My only concern with us turning around right away, although it could happen, is the way that we've come up so steeply, sort of shutting off the sellers from 4 days ago up against this,
Right.
Like, it's going to basically think about this is that we essentially just had a V-shaped reversal to here, and now it's going to require another V-shape to take us back down through 1350 to take us back down.
Good point.
Which could be, difficult. I mean, if it, I don't know.
Even to your point of shutting off sellers, if we close where we are today, we'll shut off the March 6th bar.
Yes.
And like you say, having done that in only 3 days, that's significant.
Yes, it's definitely significant. That's why I always say that the whole shutting off sellers or shutting off buyers can happen one of two ways. You either have multiple days down and then the one big up day negates them, or it can also happen this way, where it happens very quickly over 2 to 3 days of multiple days shutting them off, against the one bar down. It's interesting.
Yes, absolutely.
Mm-hmm.
So I have some questions based on what you were saying this morning.
Mm-hmm.
And I'm kind of tying them back into my Ask the Shadow the question, because it's interesting that you actually brought that up this morning. Talking about the days being either responsive or directional. When you see a day like today that is clearly responsive, basically off the open, what do you look for? Do those days, do you find that they typically stay responsive throughout the day, or do you find that it shifts to a directional? And what specifically do you like to watch for to see if you've had a change in that aspect of your day?
It can only, put it this way, it can only truly shift to directional, first of all, if it's outside of value. So that's point number one, is that today had a chance to become that. Like, if this consolidation breaks out to the upside late day and we cross 68, 69 and we keep going, let's say we rally to that 74 or whatever, then obviously it's happening. So the first tip off to it is that we are outside of value, because inside of value, you always have to assume, even with internal strong, that there's going to be some sort of a play, like against value area high, right? That it's going to roll back somewhat, and then it goes back and just forms a couple dojis, and then you say, okay, now I know we're going to trade out through value or whatever the case. As far as like other things to look for, obviously internals is a big key to it, of how it should be. One of the things that I'm trying to do, I'm really glad you asked that, because that whole thing that I talked about really just became crystallized in my mind, like over the last couple of weeks, of like how each day can really only be categorized in one of two ways. And I'm wondering myself, even, like, is there possibly like a hierarchy of things, just like in the internals where we look at the breadth first and the AD line next and the ticks after that? Could there be a hierarchy of things we could look at that would sort of, all be looked at en masse and tell us, okay, 6 out of the 10 things point to that this should be responsive here, or this should be initiating to there,
Right, absolutely.
Yeah, I mean, I will, I'm being honest with you, I have not created any such sort of system as of yet, and I don't know if even that's an answer to it, but that's kind of the direction that I find myself going, At the very least, I think the most important thing is to come in and with that idea of which it's going to be, make that decision early on, and then and stay with it, right? And then, either way, and if it's going to be responsive, it like Dalton always says, opportunities will be smaller. And then if you're outside of value and it's initiating, opportunities will be larger. So if opportunities will be smaller, that's another thing to think about too, to think, okay, we just came down to value area low. We moved a total of 5 points, whatever, from wherever we started to here. So I shouldn't expect rotation all the way to the highs. I should expect some fib number bounce. So if I was able to take 1.5 off the low, bounce from there, if I knew I came down 5, that's legitimate. Best case scenario, I can leave a tranche on, move stop up to break even, whatever the case. It's this sort of constant adjustment or knowing in advance of how aggressive or non-aggressive the play is going to be.
Absolutely.
Yeah.
It's fascinating to me that you're saying that, because one of the things I've been trying to do, probably even over the last 6 months to a year, is really try to focus myself on coming up with a checklist that helps me determine from one day to the next whether or not we're going to have a day that is more leaning itself towards chop and smaller moves, or trends and bigger moves. Because as you know, somebody who's swing trading versus somebody who's channel trading, those are almost two separate philosophies of trading, and it's hard as a day trader coming into a position each day to reestablish in your mind, okay, today I'm this kind of a trader, and yesterday I was that kind of a trader. But that is literally the key to success. If you have a way to know whether or not you're going to be responsive or directional and initiate new moves into trends, or as you're saying, just the plays off value, because you can come up with 1,000 different ways to set your targets, but the key is when it's going to move big, you want to capture those points, and yet when it's going to move small, you don't want to give them all back.
Right, you don't want to give them all back, and you don't want to make the mistake of when it's going to be small, which is even worse, of thinking that it's going to be directional, of the opposite. Like I was saying earlier on, is in my speech in the morning session, is you short those lows and it blows up in your face, and you buy that high and it blows up in your face, because you're actually not thinking responsibly. You're thinking initiating, right? So to your point, again, I reference one of the things that Dalton says, and I would tell everybody out there, as I always do, that's interested in this deeply, to read Mind Over Markets, find all his stuff, etc. Find his stuff on the web. And one of the things that he teaches all the time is to say, you just brought up a really good point, because you were saying you have to find out what kind of trader you are that day. But he often says that, he doesn't say that, but he says something very similar, where he says, you have to find out which type of traders are in control that day. And that's a really, really strong point, because he always breaks down all of the players into pretty much exactly the same categories that you just broke them down, where you say, look, there's scalpers, there's day traders, there's the momentum traders, like 2 to 3 day, call them swing or other short-term swing, there's longer-term swing, and then you have the other time frame, quote-unquote, like the real other time frame, which would be insurance companies, pension funds, large hedge funds, etc. They do not care or know about any of this, right? They are just buying whenever they have an order to fill. The client says, I need 50,000 McDonald's, and they're just hitting the button all day long to beat the VWAP, whatever. They do not care. So think about it. And those people are probably active on those days when the market is having a trending day, because that's why overall volume is going up, and you see that every single pullback is bought, and stocks just keep going up, 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 or down, down, down if they're sellers, right? So he always talks about in these terms which time frame is in control. On the super responsive day where it's just crap, like a couple days ago, and it's just very small range, it's purely scalpers in control. Nobody that has any longer time frame is doing anything. They're not really involved,
Right.
Yeah, it's interesting. You make a very good point. That is essentially the conundrum, is, the identification of this early on, and then the appropriate play as it unfolds.
Right. exactly.
Yep.
And being in that appropriate play with enough time and leverage to take advantage of it. that's it's easy to see it after it's unfolded and
right.
go, oh, it's that kind of day. But then you say to yourself, and yes, I was late.
Right. I would say to that point, the only weapon we have in our arsenal against that would have to be internals, and that's why I think that putting market internals, reading them, in a dynamic manner together with the profile is really, really powerful, because that's basically, one way that you can gauge the move. Like, it's just, think about it, it's not going to be initiative if the master sector list is mixed and the breadth is like, 1.3 to 1 positive or whatever. It's just not. How could it possibly be? There's not enough juice out there to push the S&P 500 higher, to
right.
push all those stocks in the NYSE higher. It's just not happening.
Right.
So I think that's really, one of the only things. And then the other thing is to not, and we all have, this happens to everybody, me included, but the other thing is to not get too caught up in ever thinking that you can know everything, Like there's always, if there wasn't any uncertainty, then there'd be no money to be made. There would be no risk and hence no reward. So even when we do put all these pieces of the puzzle together, be aware there's still going to be a few times a month where you're going to have to just be left scratching your head and be like, I don't get it. I mean, by all intents and purposes, that value area high should have backed off. Like, that should have held. That's just crazy,
Right.
And I guess what I'm trying to say is that to not be too put off by those days, that even when that does happen, you just chalk it up to, like, that's just trading. Like, you go back through your losses and you say, you know what, that was a good loss. What else there's nothing I could do about it. That's just a typical good stop out.
Right. Absolutely.
Yeah.
And referencing to stop outs and kind of going back to my Ask the Shadow question. So when you think of the two different styles of being a responsive trader and being a directional trader, and just for example, let's throw out like if we had played the bounce off the value area high today, where do you think about putting, because I think the other huge challenge that most traders have is how do you net your wins to your losses? Because it's easy to end up having your average wins, let's say somewhere around $3 to $4, because you're getting a lot of small wins at like a point and a half. And then on some days when you get those directional moves, if you've caught them, maybe you get 6 to 10 points, but it still all ends up averaging to 3 or 4. And I find it very, very difficult to keep a stop loss. I never use hard stops in the sense of putting hard stops in the market. I always use my trend lines and use a mental stop. But how do you deal with your initial stops on a responsive trade versus a directional trade such that in the end, stop or average loss is not so big that it ends up causing your gains to all wash out to break even or end up as a net loss?
Okay, so to me, regardless of whether it's responsive or initiating, and I wish I could be more scientific, but I'm being completely honest with you. I'm telling you exactly how I do it.
Okay.
It becomes very obvious to me, and it should become very obvious to anybody who is trading, from watching 5-minute candles and time and sales. You should be able to know after you watch it for a while if you're wrong or right relatively early. So again, very unscientific, but I don't have any specific, like, I never want to risk more than this. I never want to risk more than that. Like, I think I kind of get what you're asking, and I think what you're saying is like, because you emailed me this as well, and I don't know if I touched upon it properly, but you're saying kind of like, look, if I think this is initiating move, and I think that this could move $10, should I be willing to risk like $4, right? Like, should there be some big reversal bar on the 15-minute that might be $4 away? Should I use that as my stop, correct?
Kind of. I've learned the hard way, actually, that kind of mindset is very discouraging, and you'll never make it on the ES trying to do that kind of a thing. What I'm saying is, for example, let's say that you buy a bounce on an initiating trade, and you see that the last swing low is 5 points down. And even if you see that you have a potential to make 10, I'm not thinking of it in terms of I'm risking 5 to make 10. I'm not really concerned with what I'm risking so much as I find it hard when I allow myself to risk that much that if it does go against me, I have these huge net losses on my risk management side that make it difficult on some days and some weeks to end up with a net profit overall. Because my average, maybe I only got a 10-point win once, and then the rest of my wins that week were more responsive wins to where it was only a point and a half or something like that. And so those larger stops can sometimes ending up just washing out the good stuff that you've done.
Okay, good. So excellent. So this is an excellent point. By the way, I need to just take a pause here, guys. We're falling out of the consolidation to the downside, which is interesting. So not only did we not continue higher, but we're backing off a little bit. And while I keep talking to Cynthia, I'm going to switch it back to the quad. So yeah, so I think we're thinking about we're both talking about the exact same thing. And here's my point of it is that I see the exact same setup that you do. Right, I see that there's potential for a larger move, and you said it perfectly when you said, okay, so now I see that the prior swing low is $5 away, and then you're saying, okay, but because I'm thinking it's the big move, sometimes if I let myself, if I just take all that pain and hold to that larger swing move, I may allow 4 days of gains to go away. Right, that's kind of what you're saying. Like this may kind of skew risk reward for me in an unfavorable fashion, and I've given up too much, right?
Exactly.
Okay, so here's how I play it. I see the same support and resistance that everybody else does. I agree with you that technically looking at the chart, it would be like $5 away. And again, I'm admitting, not scientific, and also takes into account like a lot of just tape reading experience, watching closely, and making judgment calls, because a lot of it comes down to that. However, even though I know that technically it's there, unless price just completely reverses and blows up in my face and goes down those $5 immediately, what I'm telling you is that as the trade is developing, I am constantly reassessing the situation on every 5-minute bar and watching time and sales and seeing how the flutter is happening. If there's, if I know I'm long, I should be constantly taking out those offers and fluttering back like to a higher low, etc. I'm watching that constantly, and I know long before the $5 ever comes up if this is going to work or not. And I know that sounds very unscientific, or like that I'm second guessing the trade, because who am I to say if it's going to go or not going to go? But to me, if you've watched the ES tape for years and you just see it kind of in front of you, and you kind of have to know that after a while, and especially when you put it together with short-term time frame like the 5-minute bars, even though that pivot stop might be $5 away, as the trade is developing of how those 5-minute bars are developing, say, okay, wait a minute, if this really going to break out and go to there, for instance, why did I just go strong 5-minute bar up, and why did I just give back that whole bar? Like, you understand, we're not talking 1-minute bars, 2-minute bars, or 3-minute bars. 5-minute is actually a decently sizable time frame, to me at least, to have a good idea as to whether or not the trade is, really developing in the direction you want to go or not. Like, it's very, very rare to me that you would see like huge choppy action when the trade is supposed to go somewhere and it's constantly negating, 5-minute bar lows or whatever. It just won't do that. It'll make bigger body up, smaller body pause, pull back a little smaller body pause, leg up again. Do you know what I'm saying? So like once you're in there, 5 minutes goes by, 10 minutes goes by, whatever. To me, the stop is no longer $5 away. Now it's more of a question of like, okay, I'm already, either 2 points to the good, it's taken off, or I can see that it's still consolidating under the high, it's about to take off, and now the consolidation is much tighter, for instance. Now I can honestly say, okay, 15 minutes have gone by, the trade hasn't done squat. You know what? To me, the stop is now 4 ticks. I mean, we need to make or break here. Something's got to happen.
Okay, that makes sense.
Yeah, so I would say just constantly reassess the situation at every moment and make your decision every 5 minutes. Like that to me is the smallest time frame. That's the one that I only use. I don't go lower than that. So I'll wait for if I have what's the word I'm looking for? If I'm antsy and I want to jump out, a lot of times I'll force myself by the clock to wait for that 5-minute period to end. Like I'll be watching. I'll say, okay, it is 10:34 a.m. Okay, you know what? This looks crappy, but you know what? I can't really say until this bar prints. Okay, now the bar printed, it closed on its low. Okay, I know I have a little more information to go with. Okay, I'm moving the stop, or I'm out of here. This is not working.
Okay, that makes sense.
Mm.
That actually makes a lot of sense.
Yeah, that's to me is the way I look at it.
Okay. Fantastic.
It's always good talking to you.
Fabulous information. Hey, I ordered both of Dalton's books yesterday. I went
cool.
on Amazon and got them ordered, and I'm reading them. And if you are willing at all at any time to post a YouTube video about Investor RT, just how to read the profile, I would love that.
Yeah, I will probably do that. Everything you emailed me, by the way, was correct that I told you, is those are my settings, and I really keep it very simple. I am not like an expert on that program by any means. I'm really just interested in the most basic profile of structure, of seeing the TPOs and seeing the volume underneath it. So basically, that's what I can tell you, is everything you emailed me asking me about the settings that you had seen in my blog posts and in my videos, you were correct. Those are the settings. So
great, and I have that all set. Let me ask you: do you use the master symbol on that program, or do you use the month?
No, you mean the continuous versus the actual contract?
Yeah.
I use the actual contract. So like right now, I have plugged into it ESM2.
Okay.
So I use the actual.
Okay.
Yeah.
Good to know.
Exactly. Okay.
Okay.
Fantastic talking to you, as always.
Awesome. The market's breaking down?
It is breaking down. So we're coming right to that ascending trend line from this morning. So we might actually move into value. We shall see.
Very possible.
It's possible. All right. Cynthia, have a phenomenal weekend.
You too.
All right. Take care.
Awesome call. Thanks.
All right. Bye-bye.
Bye.
Okay, Cynthia from Arkansas. Always a pleasure speaking to her, a.k.a. Cynthia E. She's quite popular in chat. Nice to talk to her again. All right, let's do a quick rundown here. We've come down to this ascending trend line here. Let's see here, extend it out to the right. So now, this is interesting. Knowing that this 15-minute bar was such a big body, I would be thinking that shorts are going to be targeting probably the halfway point of it, possibly, for a rollback to this trend line, right, with a target of maybe like 63-ish. That's what I would be thinking, because usually the backside of, the halfway point is usually as high as the market can bounce. And then you'll get that turn back to the downside. So looking at like also market internals here, let me see something. And it's interesting though, because look at ticks just went all the way from 0 back to positive. Huge volume also on that shift downwards. Huge volume. So again, all I can say about that move is just watch the halfway point of the bar here around 66 for a possible rollback. Like right here, I guess you went halfway pretty much on the body there, maybe a little bit higher than halfway already. That would be at what? 65.75 is where it just went to. So the short move, I guess, from the halfway point would take you back to the trend line here, and then loss of the trend line here at 63. If that was to lose, there will probably be a bounce there. I would think that we have somewhat of a viable action there at the 63, and then remember underneath that is the value area high at the 60. What's going to be interesting as well is that if there is further selling, and it doesn't there's nothing negative really happening internally just now. All you did was just lose that consolidation to the downside. But what I was going to say is what's going to be interesting, of course, is how does that leave us on the dailies? Because it's a little bit of a topping tail. And, on the cash market, as Cynthia was saying, she was looking for a move to these bodies. Well, look at on the cash market. You're at the bodies already. The high of today basically tested the body high of these bars very well. So, like I said, it's very hard to say. I don't know if that even brings in the possibility of reversal right away. As we were talking on the call, it doesn't strike me that way. Like, that's why I was saying, like, early in the session, I was saying probably some higher prices early in the week, next week, that we could go higher, because it would be strange to me that we would have this V-shaped reversal to the upside and then V-shaped reversal to the downside, just kind of turning everything around so quickly. So I don't know. All right, let's do a market internals rundown, and then let's do some trivia. Let's do some trivia. All right, switching us over to the 2.45 to 1 positive now, which is interesting, correct? On the NYSE. NASDAQ at 1229. Notice that we did get a new low tick spike there, and then our tick spike back up was not as high. So still kind of a downtrend in the ticks is happening. Now, if you were really aggressive and you were looking to predict that breakdown outside of the that the break from the consolidation was going to happen down rather than up, I would think that the slow downdraft in the tick readings was really your only way of knowing that. Not that there's any way of knowing for sure, but I'm just pointing that out, that I said that a couple of times, that as the market is consolidating here, every time we did an internals rundown, the tick action to me looked weaker and weaker as was developing lower. So just something to think about. That let's say that the next time you're faced with a consolidation and you think it's going to break to the upside, you should probably see different tick action than what we saw today. You should see the mirror image of it with ticks trending up, kind of sideways to up as the market just goes sideways. And then that might be a very good clue that the market is going to break to the upside rather than the downside out of that tight consolidation.